Guys, welcome to the second episode of the Forex Freakap. Basically, some of you might have seen this episode yesterday, so you'll know what it's all about, but just in case this is your first time watching, pretty much what I'm going to do today is just talk about markets, pretty much. All of the fundamental themes, all of the news, anything fundamental that was important in moving FX markets today, stock markets, crude oil markets. We also look at bond markets a little bit as well. Let's get started. So, pretty much today, guys, if you just look at the screen, very inconclusive, choppy price action for the most part in the stock market and crude oil market and even the bond market, to be honest. Very choppy. Just look here at this chart in the top left. That's the S&P 500. We're going up and down and then up and down. That big green candle, that was the US cash open at 2:30 London time. Since then, we've just completely reversed back to lows of the day, and now we're in the middle of the range again. Very choppy conditions. And the thing is, there hasn't been really one major theme that has been driving sentiment. Investors, much like yesterday, we talked about this yesterday, investors are kind of juggling themes in their head, you know, more stimulus, trade wars, coronavirus outbreak. They're weighing up all these factors, and markets are just looking for more direction at the moment. However, we haven't talked about FX markets yet. Let me just swap screens here. This is the dollar majors with the dollar index in the top left corner. You can see that in FX markets, there was much more of a risk-on tone today, okay? So the main reason I'm saying there was a risk-on tone is because of dollar weakness. And also we saw a bit of weakness in JPY. In fact, I quite like showing you this. This will be a good thing to show you. Right, look at this table of one-day relative performance here. Euro doing the best, CAD, Swiss, GBP, AUD, NZD, all in the green, JPY, USD at the bottom. That to me is a bit of a mixed day, but generally risk on. So why were FX markets for the most part risk on today? What caused this fall in the dollar that you can see here? Well, like I said, hasn't been one sort of conclusive theme today, but we think, me and Ken were talking about this, potentially there was some Fed speak last night that definitely came across as quite dovish. You had Fed Vice Chair Clarida, and he firmly reiterated that the Fed can and will do more if needed, and there is no limit on QE, essentially. Very dovish. I mean, that's nothing new from the Fed, because Powell's been saying that for a long time, but it's just more reassurance, isn't it? And dovish Fed is a negative for USD, so that could certainly be one thing. There was also Fed's Bostich, and he was saying some dovish things. He was worried about unemployment. He was also noting the recent pickup in COVID cases and how that seems to be having a negative impact on some of the real-time economic data in some of the places where cases are rising, like Florida, California, Texas. Real-time economic data, by the way, is stuff like mobility data, so you can get these daily reports from, you know, it could be, what are the sat-nav companies? Can't remember them off by heart. Maybe City Mapper or something like that. You can get them in the US. And when you see the amount of travel going down, that is a negative sign for economic activity, and that has been being observed in some of these states where cases are rising. So a little bit dovish there. You're probably going to see in the next Fed meeting they acknowledge this growing risk of second wave in the US, all potentially laying the groundwork for today's negative US dollar move. Also potentially, there was one other thing. We did have some news on the US fiscal stimulus front today. So President Trump yesterday, he was talking about how Americans will be getting another stimulus check, so basically money, in the next round of relief. And there's also a Fox reporter talking about how the White House is pushing for Republicans in the Senate to compromise with the Democrats because they really want to get more fiscal stimulus out there, obviously going into the election. Usually people want to do fiscal stimulus. It's good for the economy ahead of an election. And though you could argue that maybe that would be a dollar positive, you could probably make a bigger argument that that would be like a risk appetite positive, which is more of a dollar negative. But yeah, anyway, that's potentially some of the things behind today's dollar weakness. But let's move on. Just look at this chart in the bottom right. Let me just put it on 1 month. In fact, I'm going to make it big for you. This is gold. As you can see, gold today not only went above 1800, but it also went to levels not seen since, you see this massive red candle? That's when we got the all-time high of 1920. That is August. Is it August? Yeah, August 2011. So today gold reached levels not seen since August 2011. And you know what, I think this is a good opportunity to talk about generally why has gold been performing so well. Because let's just go back to that month chart actually. It's been going up pretty much every single month for like the last, nearly year and a half, 2 years. Why? Why does it keep going up? Well, let's start with safe haven demand. Okay, gold is seen as a safe haven asset, and people are still mulling all of these risks to the global economic outlook, such as the resurgence in the coronavirus. Cases still going up globally, cases going up in the US. You've also got stuff like Brexit talks and tensions between the US and China. All of these things keeping a floor under gold because the risks are still there and they are weighing on the economy. But probably more importantly is the next point I want to talk about, and you can read about this in a bit more detail in the blog below, but it is central bank stimulus. Gold loves central bank stimulus because basically gold loves it when interest rates are really, really low. Because when interest rates are really, really low, it generally leads to the devaluation of money, which makes places like gold a more attractive place to leave your cash, basically invest in gold. And what are we seeing with all the central banks in the globe? The Fed, they're going to do more easing. The ECB, probably more likely to do more easing than any kind of tightening. And that is just the case for most of these major global central banks. The risk continues to point towards more easing rather than less. That is a gold positive. And that is why we've seen gold come so far in the last 2 years. What else is there to talk about today? Yeah, I think one of the other notable news events of the day didn't really cause too much price action, but Rishi Sunak, the UK finance minister, he was out this morning. He was giving this address to the House of Commons about around midday London time, and he was talking about the UK government's sort of updated economic recovery strategy post, coronavirus, obviously. At the time, GBP actually did like it. We did see some positive pips in GBP at the time, gained around 20 pips. However, on the day, where's my GBP chart? Here in the top right. Yeah, we're higher, we're doing all right. If we just compare how GBP performed compared to the rest, about in the middle, to be fair. You can see it just around the mouse. So it's doing all right. So GBP isn't a massive outperformer on this, but it did like what Sunak had to say. So what did he say? 1,000 quid bonus for employers who bring back furloughed workers or who fired workers because of coronavirus. So that's good. That should hopefully at least take an edge off of job losses that we're going to see when they start to ease that not job retention scheme, what do you call it? The furlough scheme. The government has been paying up until now 80%. They're going to wean that off now. This at least is probably going to take the edge off of that, although we are going to see more job losses to come. Stamp duty raised to 500k, that should be good for the UK housing market. VAT tax cut for mainly the travel and hospitality services industries. Should be good for general consumption, trying to encourage people to get out there spending. I saw something about 50%, the government's going to pay 50% of your restaurant bill up to 10 quid per person, which is pretty good. I'm probably going to try and make use of that. What else was there? Yeah, those are the main things. GBP liked it. Fiscal stimulus, generally a positive for a currency. And fiscal stimulus wasn't too much, because sometimes if it's too much, especially for the UK, it could potentially trigger some concerns about its, the ability of the UK government to pay it back. Too much fiscal stimulus can be a negative, remember. It can be like, oh my God, they'll never pay it back. Run away from the currency. Just finishing up then. We've covered all the main points now. AUD, NZD, CAD, as you can see on this table here. CAD's at the top. doing pretty well. By the way, you can't actually see the Scandinavian currencies. I think they are still performing the best on the day. Yeah, they are. CAD doing well. NZD, AUD kind of lagging a little bit, but as you can see here, equity market's been very, very choppy, and AUD and NZD do tend to mirror price action in the equity markets. They are risk assets after all. And finally, havens. Yeah, like I said, JPY lower amid risk on flows in the FX market. Risk on flows anyway, not broad market risk on flows. Swiss kind of perplexingly doing quite well. I'm not really sure what's going on here. Swiss can be a bit choppy, to be honest. It's like, if I was a trader, I wouldn't trade the Swiss franc because I'm not really sure why it does what it does a lot of the time. But the Swiss National Bank, the SNB, won't be liking this Swissy strength that we're seeing today, and there's always the risk that they're trying to devalue the currency. So we could see that potentially if it continues to gain ground as it is. That is pretty much it from me, guys. I think we've covered all of the main points today. I hope you are finding these episodes useful. See you in the next one.